And let me start the screen share. This time maybe we'll do the right screen at the first try. All right, so bulletproof risk control, right? We talked about risk management already on one call. That was like a very, very slight introduction to it. But really, what is risk management? And I will be using examples of you guys. Hey Seth, how's it going? Of you guys, using it, your trades, and then also the homework that you did, because those are great examples. And by the way, you did a great job. All of it, I liked all of them. All of you did a great job with the homework. All right, so first of all, the understanding of risk management. So what is risk management, right? Risk management essentially is the handling of situations when it doesn't go our way, right? And that's important because people don't like to think about the times when it doesn't go their way, right? That's the thing that people don't want to focus on, right? The last homework, 99% of the trades were profitable, right? So most of them, there's maybe one unprofitable trade, but most of them were profitable. And that will happen naturally, right? Also, when I look at historical trades, and that's the thing, that's when I started out coding strategies for people, right? Like that, it seems easy, like I promise you, every single call that I had with a client at the beginning, they were like, oh yeah, well, this strategy is really easy. All you need to do is this, right? That's how it starts. But then you dig deeper, and then first of all, coding wise, you realize that it's like a couple thousand lines of code, or tens of thousands, and that's number one. But then number two is that when they show you, in a back test, quote unquote, back test by, showing you the chart history in the back, they're like, oh, see how great it works, and when you, at first you don't see it, but now I do, they deliberately block out bad trades and only show good trades, and then just go back. Now think about it. Does that make logical sense? So someone's about to spend like 80 grand to code a strategy, and they're giving me wrong data on a strategy that doesn't even work the way it's done right now. Does it make sense for someone to do that? Absolutely not. But the ego, the emotions, and the market overall lets you do that, right? And they're absolutely convinced, but I'm like, okay, well, what about this situation? And they're like, oh, well, this is, one in a million. And I'm like, okay, what about this situation? What about this situation, And then, that doesn't mean that I'm not going to code it. I will. But we need to find, ways to handle those situations. And, oftentimes they then realize that, the strategy isn't as profitable as they thought. Or maybe they were realistic with the projections, but, not with the trades themselves. So people like to focus on, in trading, right, on the positive things. This is going back to the story about the fisherman, right? Always tells you how big of a fish he caught, and really it's like a tenth of the size, or like a small sardine or something. But he says like, yeah, I got this shark, and this is because it's about money, it's about ego. And when we talk about money in a society, it's something that's very very like people don't like to talk about money, how much they make, right? So then when we talk about trading, and if we won or lost a trade, we compare it directly or connect it directly with I made money or lost money, right? So that makes you, subconsciously just amplify that, right? Amplify the positives and diminish the negatives, which is fine, but when it comes to trading and when it comes to being realistic with your strategy, because the market doesn't care about your emotions, right? Being realistic about the strategy, that's when it's important that we stop that and look at it realistically, right? So that's the thing that people don't want to do, and that's just simple human psychology, right? We focus on the positives, especially when it comes to money, and that's the same thing with the fisherman, right? And every single one of us has a fisherman in themselves, right? And what's important for us is to, we don't have to constantly push it away, right? We just need to be realistic once when we do the work, when we do the strategy, and then when we have it, we'll just follow the rules, right? So that's yet another reason why it's important to have a strategy, have it planned out, and then you just follow the rules. You basically break your work into two, into the creative thinking, right, and then just into the execution. And this is how it usually works. So Alex Hormozi, this business guy, he's doing well for himself, but I listen to him sometimes, and he said that the best advice that he ever got was from himself, when he sat down and he thought to himself, okay, if I were to coach myself, what would I say? And funnily enough, what he would say, what he would tell himself, is something that he's not doing right now, right? Because he basically isolated the analytical from the emotional, right? And this is basically the same situation where we first do the analytical part with the strategy, and then we just execute on that strategy. We split into two, essentially, right? And this same exact theory works amazingly well when you have in AI, for example, right? So I'm not going to go too much into that, but one of our projects that we have is that we're coding a software that codes software, essentially, right? So and it helps us a lot, because when there's a big project, we're able to digest it into small pieces, and then just make 20-30 documents that we can just give to basically any coder, and they're able to code it without having to understand what the entire project is doing, right? And the way we do that is that we make two AIs and we let them communicate with each other, right? So one is the analytical one and the other one executes, right? It's not the same one, it's two different ones, and they're communicating. And that's basically what we're doing when we're splitting the work into building a strategy and then executing on that strategy. The beautiful part is that when you have built your strategy enough, that execution part can be automated. So then you don't have to do that, which is just great, right? At least in my opinion. So there's that. We don't like to focus on the negative things, but they're there, right? And every single strategy has bad times, every single one, right? And this is something that we need to realize and be okay with. Every single strategy has bad trades, and really what I'm looking at when I see a new strategy is, I don't even look at the good ones, at the good trades. I only look at the bad trades, because that's what's going to make or break the strategy. Every strategy will have beautiful trades, otherwise it wouldn't even start being a strategy, right? Every single strategy will have good trades, but what about the bad trades? Because those are the ones that will break the strategy, right? And risk management goes into the fact of handling those bad situations, right? If there were only good situations, then we don't need risk management. And risk management also does not mean, we just focus on the positive things, and, if something went wrong, we just put a stop loss here, and that's our risk management, right? Does not work like that. Does not work like that. Hey, Saif, how's it going? We don't just put a stop loss randomly, or, add invalidation and just say, okay, we're doing risk management. That's just a small portion of it, you know. Like on good trades, it's easy to risk manage, right? But what about bad trades? What if you have like really, really bad trades, like 4 or 5 of them in a row, right? Those are questions we need to answer in order to have a strategy. Because guess what? It will happen. It can happen today, tomorrow, a month from now, a year from now, it doesn't matter, but it will happen. If you will be trading at that time, it will affect you. And they do come much more often and much earlier than you think, first of all. And second of all, as Murphy's Law, right? When you just finish a strategy and you apply it, that's usually rule of thumb, that's going to be the time when the market turns against you, and it does not work well. A word strategy does not work well. It happens a lot in Murphy's Law. So that's our groundwork, right? Risk management means handling the situations that people don't want to handle, don't want to look at. Times when we lose money, and we don't want to look at that because we don't have the answer to the questions that we have to ask, and that sucks. Because if we don't have the answers to those questions, it means that we're going to lose money. It's a bad place to be in, But guess what we did with Alex? I said that yesterday. Guess what we did with Alex that turned our strategy development, 180 degrees from bad to really, really good. We sat down, we went through every trade, and we saw patterns and similarities, and saw how we can fix those situations where we lose money, right? And to do that, well, how do we do that? Well, look at it this way. The market, right, and trading is a business, right? And if you want something from it, you need to pay a price, right? If you want money from it, you can't pay money, right? That doesn't really make sense because the price that you pay is larger than what you get, right? So if you want something from the market, you need to pay a price that is larger than what you're getting, right? So if you pay money, that doesn't really work out, but most people do that, right? They want money, and they want profitable trades, and they decide in order to get that, they pay with money, right? So they lose because they need to give more than they get, right? So what can we give, right? The price, if you want money consistently, the price is your ego, constant FOMO, and thoughts that, your strategy sucks, you're not making money, you're not being filled, all of those things. Like when you feel those things, you're on the right track, right? When you feel excitement that you're making money, you're on the wrong track. That's the paradox of it, right? So you need to pay a price for profitability, and the price is ego and FOMO, essentially. And you will miss beautiful trades, you will miss big trades, you will, not catch every single move, but you will make money. And it's perfect setups over everything, right? So as long, think about that. So we have every strategy, and I will show you an example, but every strategy has times when it works well and when it doesn't work well, right? So what if we could eliminate like 99% of the times when it doesn't work well and only have the times when it works well? I mean, that's great, right? Who wouldn't do that? So now if I told you, okay, well, we can eliminate the times where 99% doesn't work well, but we will also eliminate 50% of the times when it does work well. Do you take it? Well, I mean, yeah, right? But, missing out on 50% of the time when it does work well kind of sucks. At least emotionally, right? Not on your bank account. Your bank account will be happy. Because the ratio between winning and losing trades, I mean, you just, I don't know, 10x'd it, 100x'd it, depending on the strategy. So now you're actually making money, but you might need to sit out some trades where there's a big move, and someone else, might be making money, but you're not. So, question, who will make more money, right? The person that tries to catch every single trade, or the person that waits for the perfect setup but only trades once a week? Who will make more money? Is it the guy that is trying to catch every big move, sometimes catches it, sometimes not, sometimes he gets burned? Or it's someone that trades once every single week. The trades that they trade is a big move, and they are right 99% of the time, 99.5% of the time. Who's gonna make more money? The guy that's waiting for the setups, right? The guy that's waiting for the setups. The problem is, though, that is boring. You could, say, like, you can also reframe it. I can be like, hey, how about you will make, say, 40% every week. You will make 40% every week. And all you have to do is look at the chart 10 minutes every day. That's all you have to do. In fact, you're not allowed to look at it more. 10 minutes every single day, and you will make 40% a week. But you will only do one trade, and not much is happening. But at the end of the week, you will go away with 40%. That's literally possible. Like, I have a friend that's literally doing that. And I would be doing that too if I wouldn't want to create more strategies. Yeah, you can just wait for the perfect setup, trade once a week, and be golden. Whereas, people trade 20 trades a day and, take trades that are great, take trades that are, 50-50, and take trades that are just bad, right? So perfect setups over everything, right? And if we compare someone that tries to catch every trade or someone that waits for the perfect setup, the guy that waits for the perfect setup might miss out on 8 trades that were great, but he's also going to miss out on 20 trades that were horrible, and he's going to take the one trade that's good. We talked about it yesterday, the same thing that Warren Buffett says, right? The beauty of investing is that you don't pay for saying no. You only pay for saying yes. So you can say no a million times and wait for the perfect setup, and then just take that one. And your profitability is going to be very, very high. Now, the trade-off there is, how often does it happen, right? The perfect setup does not happen every single day. So you need to find a good balance between that, right? And you find a good balance by knowing your numbers, by understanding what you're even trading in the first place. So if you want something in the market, you need to pay the price for it. If you want money, you need to pay with patience, with FOMO, and with feeling horrible for the time being. But once you do, and once you break through it, you will win, right? You need to look at trades that no one likes to do. You need to manage risk that no one likes to do. You need to miss out on trades that no one likes to do. But you will be profitable. Whereas, there might be someone that's completely driven by emotions, and they will have a more fun time. They will. But they will also lose money constantly. And I say it over and over again because it does not seem that way sometimes, but you will be losing money week over week, month over month. You will. So, right. So let me give you an example, right? So here's a strategy that I've been developing. I know it's a lot of color buttons and everything, right? But we don't have to think about that. In fact, I will make it very simple for you guys and only show some kind of entries. This is not the Stingray strategy, this is just a different one, but I've been looking at it today and there are some great examples of what to do or not to do, really. All right, so this strategy works well. It works really well, right? Except the times where it doesn't, right? And there are very few situations where it doesn't, but it's usually, well, there's two actually here, which is here, this area, these longs here, and these shorts here. So if you understand, like, some of you might already say, okay, well, this means that this is a trend reversal strategy and it doesn't work when, there's big moves that are not accounted for. And this is something that I know because I've back tested it, right? Your strategy, you need to find the pockets where it doesn't work well, right? How do you do that? Well, you got to look at a couple trades, right? You already did 5 trades is good, but instead of just picking 5 trades, what you need to do is either you have the replay or you don't. If you don't have the replay, it's fine. All you need to do is just go back, without using the price. That's a big thing. You can't see the price. I'll just go back here and then I'll look at the price and I'll assume that this is live, right? This right here is the live time. So I'll just adjust it so I can see the price like this, and this is live, right? So now I will move my mouse and assume that I'm live trading. And as I'm live trading, every single time my strategy triggers a trade, I do the trade. I have to do the trade, right? So let's just do this in this case. Like, obviously I do it automated, but let's just do it manually in this case, right? Let's just assume that my strategy here is the moving average cross, just because I have it on here right now. So I have these 2 lines. When they cross, that's a trade. Okay, so let's go. Let's see. Going, nothing happens. I'm in a nice short. Still nothing's happening. Okay, there we go, I just crossed. Okay, so this let's just assume that this is a signal, right? And I'm not looking at stochastics. You could say, some of you might be shouting, hopefully the stochastic is stopped out, so why would I ever long here? I wouldn't, right? But let's just assume that my only strategy right now is just a cross and I'm not looking at anything else for simplicity's sake. So I'm doing a long here. My take profit is gonna be random, right? Top of the range with a profit in the middle, right? I'm just gonna put a line here, and my stop loss is at the bottom of the range. Horrible trade, but it doesn't matter, right? Let's just assume that that's my strategy. Right, so now we go. See how it plays out. Okay. So we hit our profit, right? As we did hit our profit, I will mark this with, let's just do like a X here or whatever. And I will close the trade here. There we go. And keep going. Now we look for another cross. There we go, crossed for short. Put a short here. My middle of the range is here. Bottom of the range is here. move it. Right, let's go. Okay, so we hit 1 TP. Did we hit the second one? Oh, almost not. And see how I'm not moving the TP? Yes, I would put in more thought into it, but as the trade is going on, I'm not allowed to do anything, right? We're simulating live trading. We hit 1 TP here, stop loss to break even. Or, okay, no, let's just say I'm not doing it, right? Because I'm doing a simple strategy. We're still in a trade. We had to hit the TP or the stop loss or another trade, right? So just say that this was the trade, right? And that's it. So now I have 2 trades, and I take a screenshot of this, I take a screenshot of this, and I just keep going, right? Every single time my strategy triggers, I will trade it, right? And when you do that, you know, then, you know, in theory, you would have this if you did 100 trades or 200 trades, which, by the way, is something that I did manually too, you know. So it's just, you know, the more you do it, the better you'll understand your strategy, the better you'll know how to fix it. So okay, we have two situations here. The quality over quantity guy, absolutely. Absolutely. I will take a look soon. I wanna, you know what? Just because it's you, I'll take a quick look at the NASDAQ. I don't know what you're doing, so I'm just gonna check real quick. All right, your 4 is topping out. Here, I hope you're long. I mean, you've been long already, I assume, right? I would hope so. But, you know, dude, also on a longer time frames, you're actually looking pretty golden here. You're looking pretty good here. I think it was a good call, good trade. I will look at it a bit more later. But yeah, good trade. I think you entered long like much earlier. I saw your message. So, all right, 2 pockets. Right, 2 pockets. Here and here when it doesn't work well. All right. Well, let's see why. Why did we trigger so many shorts here in a move upwards? Okay, I'm looking at the RSI. The RSI is a main decision maker in the strategy. So I can see that the RSI is like just chopping around the top, right? Okay, interesting. Let's look at the longs that did not work well. Okay, interesting. The RSI is chopping around the bottom. All right. So why is the RSI chopping around the bottom? Well, the RSI is an oscillator, right? And sometimes it happens that, you know, we go up, down, and sometimes it happens that we top out. But there's still room to go in the price. And that happens, and we're pushing the price more and more, and the RSI doesn't really have anywhere to go. So it just chops around the top, right? So that's the problem. What's the solution? Well, what we can do is we can look at a higher time frame. And when we look at the higher time frame, we might see that the RSI on a higher time frame still has a long way to go. And if it still has a long way to go, and our lower time frame, the one that we're trading, is topped out already, well, all that means is that we have to chop around, because the price is going to go higher as, you know, we have an alignment on higher time frames, maybe even lower time frames below this. But our RSI here is topped out, so it will chop around. So if that situation happens, guess what? We just don't trade. We just don't trade, and we don't take any of these trades. Now, what's a possible danger to doing that? Well, if we cut out trades, you know, it could happen that we cut out good trades as well. Maybe we cut out this trade. Maybe we cut out this trade. Maybe we cut out this trade, which would suck because that's a great trade, right? Which in this case we wouldn't, but, you know, hypothetically. Well, if that happens and overall our performance improved because we cut out, you know, the main part where we lost most of our money in a strategy, So be it. That's my trade-off. That's what I pay to the market in order to get what I want in return. I missed the trade. Fine, I missed the trade, but guess what? I'm gonna put $1 million on a strategy, and it's gonna make me 300 grand, every couple of weeks, and I'm fine. Fine, I missed the trade. Boo fucking who? I'll cry in my Lambo. Who cares? So and this is the important part, right? That's the paradox. The paradox is that we don't like to look at bad trades, but that's where the money is. Because when we eliminate, everyone and their mother and their grandmother can find a strategy that works sometimes. The hard part is to eliminate the times when it doesn't. And if you do that, then you will have a good strategy, right? So this one, right, it's working really well at times, most of the times, and it's not working well at all in very specific times. And what we need to do is we need to fix the not well at all, right? Because that, this strategy was profitable already because of management, but even then it dropped the performance quite a bit and the volatility of the performance. So what's the cost of that? The cost of that are that we're gonna miss out many good trades. We're gonna miss out many good trades, but we're not gonna have, half as many bad trades, more than half. And overall, we will make much more money. Much more money. And this is the one thing that we can apply, like filters or governors, we call it, right? So basically we filter out situations in the strategy where it just doesn't trade, right? And that is the single most effective thing that we do in any strategy to take it from a unprofitable strategy to a profitable strategy. And if the client cries around that they don't have as many trades anymore, then we just give him another strategy that's filtered out too. Now we have two strategies and you have enough trades, but those trades are filtered out. And if those two strategies are negatively correlated on top of that, well, now you have a setup that's actually very solid, right? Let me know if that makes sense, guys, what I just said. Because I did go a little more technical, but I think that we have some groundwork that we set in the past few days. All right. Cool. So this is the thing that not many people want to see, which is like just focus on the times when it doesn't work well, fix those even though it sucks to look at them, and then you'll be much better off. And in situations where when someone's winning, I mean, everyone can do that, right? But in situations when someone's losing, instead of completely changing your strategy or having to completely change your strategy, or having to panic sell or panic buy and then re-enter, or just find 5 different reasons why this one time it didn't work, but then you say, okay, but it's gonna work later, and then you do the same exact thing expecting different results, all of that, right? So when you have someone and their strategy works, or like it seems like it's working, they just made a good trade, and you only see that, but what you don't see is their 50 trades afterwards that they mess up and don't talk about, right? So I'm telling you that the reality is that basically every trader amplifies their wins, diminishes their losses, and 99.99% of traders are not profitable constantly. If you ask them, do you or do you not have more money right now, than when you started trading? Yeah, you might from other sources, but not from trading, right? And they'll say, oh yeah, that's fine because that was an investment to learn, that was an investment on education. Sure, whatever. The fact is that you did not make money. You were not profitable, right? And then if you talk to someone that is profitable and you ask them, like, how do you catch every trade? They look at you like you're an idiot. Like, what do you mean every trade? I trade my strategy. I don't care about anything else. That is what a profitable trader will tell you, right? I trade my strategy. So in this strategy, right, we have pockets when it doesn't work well. We know why it doesn't work well. It's because our RSI is topped out, and it gets topped out is when there's no more space for it to go, but on other time frames there's quite a bit more space for it to move. And when that happens, our RSI tops out and we get false signals. How do we fix that? We look at higher time frames, and when there's a strong move, a strong force of the RSI on the higher time frames, and our current RSI is topped out, we don't trade. We do not trade. At least we do not trade in that direction, right? We're not longing here. We can short. We can short this. This is a beautiful short, right? So we do that by looking at higher time frames. We see how they behave, and then we use that as a governor over our current trades. All right. So that's basically it. And right now we can look at some of the trades that you guys posted, which are good examples, great examples. So most of the trades, when we just look at them, let me share my Discord right now. Cool. So when we look at them, like looking at the strategy, most of these trades, we'd be like, it's amazing, right? The strategy is just amazing, and it is good. It's very good, but it's not that good, right? These situations happen more often, and I know that because I'm trading it. But overall, we got good strategies. We got good TP levels. So like the management, any trades that you found, basically all of you, like not basically, literally all of you guys are great. They're great. And by the way, this is exactly how you should set your TPs. And then TP3 would be you'd zoom out a bit more and it'd be a little bit higher. So all of them are really good. I really like Sats too, because he's adding in fibs, Fibonacci retracements, which I mean, the theory behind them is that they work because everyone uses them, right? That's literally the theory behind them. I don't know how true that is. I mean, but that is like the agreed upon reason why they work, which is fine with me. They do work. You have levels and you have bounces. So you add those in and you will be able to hit your levels much better with the Fibonacci retracement. So yeah, and same thing here. Same thing, looking at the stochastic, and then on top of that you added in the open interest, which is also, let's just call it a different indicator, and then you look at divergences. So very solid strategy, right? All of them are. So the point is now, okay, well, we can take this strategy and let's backtest it. And what I'm looking for is, can you find situations where you are gonna lose, right? Those are the ones that I'm looking at now. What are the situations that I'm looking at in the past in the market, where we don't make that much money, or we lose money, right? Right. So those are the situations, and when we look at those unprofitable trades, we will find similarities. Like here, right? We'll find similarities. We'll find situations like, okay, the RSI stopped out here all the time. So now we have a problem. Now we have a question that we can ask, and that's the most important thing, right? Most people usually don't even have the question, which is in this case, how can we fix the RSI being topped out and getting false signals? That's our question, right? If we would not want to look at the times where it doesn't perform well, we would not know the question, so we definitely wouldn't have the answer. And we would just trade it, and the next time the RSI gets topped out or bottomed out and gets stuck there, we will lose a shit ton of money. And then, I need to explain it to someone, right, to an investor, why we're so dumb to lose money or so lazy to look at situations that have happened before. Or you need to explain it to yourself why you just lost the money that you've been working so hard for the past few weeks, right? And one thing that I guarantee you, like I can bet whatever you want on it, is that those situations will happen. There will be times where you will face very, very hard times with your strategy, with your trading. Guaranteed, right? So, and those can completely eradicate everything that you've done and more, and probably will, if you're not taking care of it, right? So the main focus should be in making sure that you survive it. Like my billionaire friend said, right, our investor, the name of the game is staying alive. And that's exactly what it means in this situation. Because if you survive this situation, then you'll be making money. Because if you survive the worst time, then there's only better times than the worst time. And if you survive the worst time, then you can only do better in the times when it's better, right? So yeah, that's the important part. So right now, homework wise, what we want to do is we want to go to the chart, take the same exact strategy that we had, but now we're actually simulating live trading, which means that we do not, we're not allowed to look ahead, right? So the way I do it is I go down, then I scroll out, go all the way back, or as far as I want to. This is the 5 minute, by the way, so this will be interesting. Then I go up, look at the price, and start trading this, right? And as we go, we'll have the trades, and it's very, very important that we take every single trade. We cannot skip a trade, because if you can skip a trade, guess which one you will skip? The shitty ones. But we don't want that, right? So let's go. Take the next trade. This is probably across right here. So I'm gonna set my short. I'll set it a little bit ahead so I can change the values. So here's my short. I'm on a 5 minute, right? We're kind of at the bottom of the range, but so we'll probably bounce, but okay. Let's assume that my stop loss is the top of the range and my take profit is the bottom of the range, right? In our scenarios, our strategies, usually we have 3 TPs, right? So let me just do that. These are my TPs. In validation, I will say is here, top of this range, because I feel like it. And again, the stock doesn't really help me right now, but let's just say that. And I cannot exit the trade unless I hit either the stop loss or the last take profit. That's the rule set that I have. So let's go. And I defined that rule set beforehand, right? So now we go, now we trade. We're still in a trade, right? We did not hit any of these levels. We almost hit the stop loss, but not just yet. and yeah, and we got another signal. So now I'm just gonna flip long, because in my strategy that I just made up, I will, when another signal comes up, then that's the validation of the first signal, which kind of makes sense. Bottom of the range, top of the range. Let's go. Okay, this looks good. Hit TP1, that's in the middle. Okay, does not look that good anymore. But let's just trade. Go, that's a long trade until here. Right, profitable trade overall. So now we're short again. Wait, are we? Short. Are we short? Or am I wrong? I might be doing it the wrong way. It doesn't matter. So now we're short again. I might be doing it the wrong way. But I want to show you the trading that I'm doing, right? So every single signal, I'm just gonna take every single signal, and I'm gonna see where is that gonna go, where's the price gonna go, is it gonna be good or is it gonna be bad? Next one, and we just keep going on and on and on and on. In this case, I'm pretty sure that I'm longing, shorting at the opposite times, but let's just assume that it doesn't matter. And you know, this strategy actually is not that bad, is it? Here we got stopped out. Actually, no, here we have a short. Look at that, see? Here we have a short because there's a signal. And we get, we hit the take profit. And then we flip one candle afterwards into a long, which by default will work well because we entered so low. Unless we break the range, which we did actually, but we did hit the TP and now we break the range. So does this make sense what I'm doing? Because this is important, because this is going to be your homework. I am taking a strategy, the same strategy that you guys picked, right? And then I am going, maybe there's a free trial on TradingView. If there is, I would encourage you guys to get it, because then you can do the replay function and you don't need to do the sliding that I do, and you can just do it this way. And you can literally, you know, buy and sell here too. That'll be nice. If not, then you just do it by dragging like I did. So yeah, and the point, what we want to do is we want to get at least, preferably more, but at least 5 winning trades and 5 losing trades. So you need 5 losing trades, right? So even if the strategy is good, you need to keep trading it until you get 5 losing trades. And then we can take those 5 losing trades. We can see how many winning trades we had compared to the losing trades, and then we can find similarities in those losing trades. And I promise you that there will be some similarities, and we will find them. And then when we go back to the strategy, or when we're live trading it, we'll be like, oh, this trade actually looks very much like the similarity that we had in the losing trades. And because of that, we can adjust accordingly, right? And now we're getting somewhere, because now we're risk managing, meaning that we're taking the situations that suck, right? We're not scared of looking at them. We solve for them. And now when we're trading, guess what? Those bad trades that lose all your money, they're not going to happen. Or they will happen much less. Or when they happen, you know how to manage them, right? And that's the point. That's the important part. So yeah. So that's basically the call. I missed something. I'm thinking, but yeah. I'm very, very tired today, so like I have like 2 brain cells right now. Sorry about that. But this is the point. We want to make sure to focus on the bad times, and when we do, we fix the issues that happen. We find similarities and we account for them. We find ways of eliminating them, and as a result, we will have a strategy that's much more consistent and works much better. There's a price to be paid. There is, which is FOMO and ego. But when we pay it, we will make money. And then we can boost our ego all we want because we're making money, right? So, and this comes back to my question, my initial question: why are you trading? To make money or to have fun, right? If you want to have fun, you do you. If you want to make money, there's probably some hard decisions you need to do. Because if there weren't hard decisions, everyone would be doing it, right? So, it's an agreed upon fact that 99% of people in the market lose money, right? Guess what 100% of people want in the market? Everyone wants to make money, right? But 99% of people lose money. So the 1% of people that make money, maybe 1%, what that means is that 1% needs to be doing something that the 99% of people don't, right? There's smart people in those 99% of people. It's not intelligence. They're not geniuses. They're just doing what the 99% of people hate to do, right? They hate to do that. They hate to look at shitty situations. They hate to sit down and actually do the work. It sucks. It's like being in a gym, right? So when you just start out in a gym, like, it's pain, right? It hurts. It's not fun. It sucks. But then you do it again and again and again. And even though you're tired, even though it hurts, even though you're sweating and it sucks, you still do it. And then eventually, you start seeing some progress. So now you're more motivated to do it. And then eventually you do that thing that, usually sucks, but you feel euphoria doing it. You feel the dopamine, right? Which is the brain finally realizing that what you're doing is right and rewards it with dopamine after you've been withholding it or forcing it to do that for a while. So eventually, once you do it once you go through this shitty thing and look at losing trades, once you do it and then you see the reward in live trading, then you will be much more inclined to do it again. So it's just breaking that first barrier, and that's something that we're gonna do right now. And as we do it, like I said it many times already, but I'm gonna say it again, like the level that you guys are getting to right now already with the mindset, with the theory behind trading, is so far advanced from anyone else that it's not even close. It's crazy. And I can tell because I can see how you guys advance, and I talk to traders. The level of trading that we will have as we progress here, right? You guys doing this homework like this. If you guys do this homework and find 5 trades that are not profitable, analyze them and find similarities. If you do that, you will literally be more advanced in trading with the mindset and theory than the multi-millionaire client I'm making a strategy for right now. Because I talked to him today and I'm like, dude, what are you talking about? We covered this in the Discord 2 days ago, literally. So and when you're ahead of that guy, you're doing pretty well. So we're setting you up not to be kind of okay with trading. We're setting you up to actually be fucking good, right? Do with that skill what you want. But that is the goal. And part of it is to do shit that sucks, right? That's fucking annoying to do, that hurts to do, but you just do it, and because you do it, you get rewarded by it by immense amounts. So that's it, right? And yeah, it sucks to break your strategy. It's horrible to break a strategy, and we did that many times. Ask Alex, like the amounts of depression we had because we're breaking our own strategies. Like we had our strategy, and we didn't really do it on purpose, breaking it. We had our strategy, but the good part is that instead of trading it right away, we were back testing it, and then it was going really well, right? And I'm back testing it, and suddenly by accident I back tested for a couple more months than I did before, and the results are completely different. They're complete shit, and I'm like, what just happened? And I look at it, and there's this one situation where strategy just blows up, like this is destroyed, and we're like, shit. So then we go back, that we fix it, right? And then we do it again, and it looks amazing. And then I look into the code, and there's a rounding error that makes all the profits better. We're like, shit. And then we do it again, and then there's another error. Then we do it again, and then we, there's some issues with the indicators, and we just go and go and go around and around and around. Find things that you haven't looked at before, and what you come to, what you end up, the destination is a strategy or multiple strategies that are much simpler than anything that you ever thought before. So that's a very important part. But again, it turned for us, like that's the biggest nugget I would give someone in trading. And if I would give them the nugget, they would look at me and be like, are you fucking serious? This is what you give me? But yeah, which is, look at the strategy in detail. Look at the trades. Do it. Go back and do every single trade and analyze it. Do the dirty work, and you will understand your strategy so much better, and you will be absolutely able to fix it. But people don't do that. They just go to the live trading. They put on 100x leverage, and they just let it rip, right? Whatever they do. Or they do some equivalent of that. It's not as crazy, but it's kind of the same idea. So yeah, that's the situation. That's the homework. I covered everything right now that I wanted to. If you have any questions, write them down now. Otherwise, we'll cover them later in the Discord. All right. If you guys have no questions, then I assume that you also know what to do for the homework. Is that correct? Cool. All right, guys. Great talking to you. Thanks for showing up. I'll take a quick nap, and then I'll finish the strategy, coding the strategy. I'll be looking forward to your guys's homework. All right, guys. Bye-bye.